Hey guys, welcome back to the Mo Trades channel. Today we're going to go over one of my favorite strategies and why you're able to consistently make money on a strategy like this. I want to break it down to you guys detail by detail and try to make it as simple as possible. We'll also do a quick market check. We had some drawings put out for the weekend, but we have been traveling, so I haven't been able to take the trades, and I'm promising you guys, the minute I'm not traveling, all I do is trade, so I'm going to try to make it as easy as possible for you guys to be able to do the same thing, especially if you've got like a home job. Let's pull up the charts. What we were looking at in the past 2 days has been Ethereum, and the reason is because it had some volatile moves. We also drew out the Elliott wave structure, and I want to show you guys, when I actually drew this thing out, I drew it out around here. So it was about 2 days ago or so. Yeah, about 1 day and 14 hours ago. And it did play out to its extent. Now, I want to explain to you guys, when you're trading and you're making these probable guesses, they're not always going to be perfect. But the point is to be able to capitalize on a move, right? So I set this up and then we had a trip. But my strategy was simple. Once I saw a bounce off of where the fourth could have ended, and look, we can fix it. It ended up actually here, technically here, and then the fifth wave made it up to here. This is a perfect 5-wave structure. We've got the 1, which is shorter than the 3. We've got the 4 that doesn't break the 1, and then we've got the top 5th wave, and we even have a double truncated wave. So this would have been a great short. But I want to walk you guys through the Fibonacci Bollinger Band strategy that I use with the Nyarda envelopes, whatever way you want to say it, right? And sometimes I like to combine it in with the Elliott waves, but let's simplify it. So first step you want to think about is, do you see these bands? We have 2 types of bands. We have this envelope, right? Which is basically the FBB. You just go here, add indicator FBB. Then we have this one, which is the Lux Algo Nadiara Watson envelope. The thing to know about this one is it's a repainting, right? So it is not perfect. You don't want to use it as your sole one. It is great for scalping as a sole one, but you need to take very low leverage and just be able to take more losses because it will let you ride if you get a good winner. Okay, so let's break down this strategy. Let's actually hide the Elliott waves because you don't necessarily need them for this. I just like having them because it's an extra layer of confluence. Okay, now we can see on here we're on the 15-minute. I usually use this on the 10 to 5, but it does work very well on the 15-minute. And how it works is every time we see a break, right, we're gonna have 2 breaks. We see a break above the envelope and we see a break above the bands, right? That means it's overextended, right? So we're going to have a bit of a pullback, right? And same on the other way, right? We see it extend down here. It breaks the bands and it breaks the envelope, right? So we had a big move up, right? It's the exact same pattern, and you're going to keep seeing that in the market when you start using indicators. And I do recommend back testing and just making sure the strategy fits your narrative, right? Because like as I'm traveling right now, it's hard for me to scalp and use this strategy consistently, right? So you want to switch to like a swing trading strategy, right? And on the back end, always have your long-term investing working to your advantage. Otherwise, you're not actually playing the game correctly. So please keep that in mind. You want to have a long-term investing strategy, whether it's mining Bitcoin, whether it's buying stocks, like whatever you are comfortable and confident in, make sure you have that long-term strategy working. Specifically depends on everybody's situation. And then when it comes to trading, you got to think there's swing trading and day trading. And this strategy we're breaking down here is a day trading strategy, right? It can turn into a swing trade. Like let's say you entered here, you would have had a whole 10 hours, right? But that's a day trade, right? And let me show you the breakdown of it here. So you notice the break, right? One thing you want to do is not enter on the break. I tested it for weeks thinking that was the solution. It's not. The answer is to enter when you have full confirmation or you break a change of character like this. Right now, know this, if you're going to enter on the change of character, you're going to need a bigger stop loss, right? Because these assets are very volatile, right? So you don't want to be using 500x in this example, right? So like, let's say you took the short here, right? You're going to want to go to the next low, right? And then your stop loss would usually be that high, but you got this problem where it wicked us out, right? So what I like to do is look a little bit behind it and see if there's another point where we can see a big resistance. So like something like this. This is a 1 to 5, 1.52, so it's a 1 to 1.52 R ratio. It's not one of the best, but at the end of the day, you could have actually exited down here, which would have made it almost a 2 to 1 example, right? And in this example, let's say you only used 100x. Your Your loss here would have been 130% of your margin, but your profit would have been 250 or 60% of your profit, of your margin. So if your margin was $100 on this trade, you would have made $262, but you would have only lost 131 if it stomped you out. If you had your stomp out here, you would have lost the $50 on margin here. And how I'm doing the math quick, you guys, is just percentages. Right? Because it's 0.49, I'm telling you that the margin is $100 and you're risking at 100x leverage. So you're only going to lose half of that entire margin balance, right? Plus the fees. And then same thing here, you're going to gain 2.51 of the margin balance. So let's even add a 0 to it. If the margin balance was 1,000, you would have made $2,510 here, and you would have lost $500 here. If your stop loss was above here and did not get stomped out, if it did, your stop loss would have been $1,000 at a $400 loss, which is still not a bad R&R, right? You're still making $2,500 in winning, and you're only losing $1,400. So that's a very good risk to reward ratio. Let me show you another example where you can see this. So as we keep going on the day, it didn't happen here, it didn't happen here, but we started riding it here, right? And here would have been an easy little gain, because remember, what you also want to do is trail your stop loss. So great example here, right? We entered here, right? We had our stop loss up here, it didn't hit it, and now we start moving down. We're going to move our stop loss to here. So we're already guaranteed profit. So even at the $100 with the 100x leverage, you're guaranteed $62 from just that little win minus the fees, right? And then again, we broke a character here. We went back up and we found it. So now we're going to move this trailing stop down to here, or heck, you could even do here, right? And then an exit that you want to look for is when it hits the envelope or the bands. On the 15-minute, the envelopes aren't as tight, so you can 100% use, or sorry, the bands aren't as tight, so you want to use the envelope for your exit. And these are the envelopes. They're the dotted line on my chart, right? So when it hits here, you're going to take it out, and that's where that is. So that's what would have given you that number. But if you're like me and you like the trailing stop loss, you just keep trailing it down. We broke change of character, we'd exit here, our end up was 2%, which is still a 1.46 to 1, right? So that's how a trailing stop loss works with this strategy. Because again, you would have done it here, right? So we've got an entry right here, basically. Our stop loss would have been up here, and our take profit would have been somewhere down here in hopes. It immediately gets in. We see the change of character because we broke this high. So our stop loss would have been moved down here. It is a tight stop loss, and we would have just broken even on this trade, but it is better than taking the loss. And if you do take the loss, it's not a big deal because your stop loss is so tight, right? And then it did it again. But we had no red candle confirmation breaking the change of character. So it would not have worked here until here, right? So now you enter here. We take our short position here. We put our next up to here, which is a very, very tight stop loss. So we don't need a much of a take profit. And again, same exact concept. We're going to use our trailing. So once we broke character, we're down to here now, right? And it did it again. It didn't break character, and we would have gotten stomped out. So this would have been another break-even trade in this example here. Now, as we keep climbing up here, we see it did not occur. We would not enter. We would not enter. We would not enter because we did not get confirmation on the bands, right? We only got confirmation on the envelope, and that is too risky. You need as much confirmation as possible. And then if you want to combine and add other things to it, for example, like the Elliott wave here, right? This is why I drew it out. I'm so sad I missed it. I would have taken this as a short. This would have been a very perfect short entry right here, right? And I would have put the stop loss here to make it tight and used high leverage, right? So if I'm using 500x, this is where I would take a 500x short, right? Because if you can see this, this is just a massive gain. I mean, even if you wrote it down and caught the bottom, that's 3.55%. On a 500x with $100 in margin, that is a 500, 1,000, 1,500, 1,750, right? Because 1% is 500, 1,000, 1,500, and then the 0.55 is the other 250, right? So that would have been a $1,750 win, and the loss at 0.35 is 2x the margin, right? It's roughly 1 point something, but let's just round it up to 2. So you would lose $100 on the first 0.2 and then another 100 on the other 0.2. So the risk here is 400, but our ability to take profit, and let's even just say we did the trailing stop loss, right? You would have trailed down to here as we broke character. Then you would have trailed down. We got to do this. There we go. Then we would have trailed down to here. And right now you could just let it run, or you could move it down to here, right? And even if you moved it down to here, the profit on this one is going to be, look, let's do the math together, guys. 2.77%. So the first percent's 500. Second percent's 1,000. So we're at total. So 500, 500, so 1,000. Then we've got 0.77, which is roughly 500, or 250 plus another half of that. And how I did that so quick is the 0.5 is 250, and then the 0.25 is the half of the 250. So it's another $375. So that would have been 500, 1,000, and then $1,375 profit to be able to just take it right out of here with the risk of only $400. And if you wanted to risk a little bit more, you could put it up here. But remember, if you didn't watch the previous video, please do. I went in depth on this liquidation chart, right? And we can see on here that liquidation's 0.78, right? That is what would take the whole margin. So we probably want to do like a 200x maybe, right? And that's still even a little bit higher because you're going to burn more of the original margin, right? So maybe just 100x. And even at 100x, let's do the math quick, right? At 100x, this would have been a $277 win with only risking $78. How I did that? It's 0.78. So at 0.78 of $100, it's 78 bucks, right? And then here, how I did it at 100 times 2.77 is what gives me the $277 profit. And look, even in this example, we have not actually hit the trailing stop loss. So we would just let it keep running, right? And it might just be another little mini crash here. And we'll see if we get down to here. Now, do notice that the bands are tightening on the 15-minute. Right? So sooner or later, we're going to need to take an exit because they're getting tight. And when the bands get tight, I consider it turning into consolidation, right? So the market sentiment is shifting. And as a day trader or even a swing trader, you need to be able to understand those things as quick as possible because those nuances are what make you a profitable trader, right? So I really hope that this actually helped and it made sense in understanding how to use I don't even know what I would call this. I usually just call it the FBB Watson envelope strategy. And think of this, you guys, we're looking for a reversal in this strategy, right? You're looking for a reversal on the market. You're looking for a reversal like here. Once we break these bands, I'm now going to be looking for a reversal on the upside, and I'm going to be switching from my shorts to going into long positions, right? So think of it that way as the easiest way to adapt to the market, but to have a framework that you can use. And I'll put on here as many strategies as I have because you guys, I've spent years building a lot of these strategies and I love them and they all fit my lifestyle differently, right? I love trading and I'm like ADHD, so I'm always thinking about it and I'm always thinking, what's the next best strategy? The trick is to stick to what you have and just refine it as much as possible. So I've come up with about 3 to 5 that I do use consistently based on what I believe the market conditions are that are currently happening. And the best way to think of the market conditions is A, using indicators, but B, looking at the fundamentals of the market. Now that does not determine my trading, but it does help me kind of get a good grip, right? Like if everything is bad in the market, everyone's talking how it's going to continue crashing, and the charts are also telling me that, that is additional confirmation to take more shorts than to be chasing the reversal for a long, right? Like you're going to get liquidated a lot, especially if you're using high leverage. So just kind of keep that in mind. Now, do me a favor, you guys, make sure you subscribe to the channel. You do not miss out my trades, my strategies, and my updates. It means the world to all you newers here. It just means the world to me. I appreciate it. And I've been getting messages on Telegram for you guys. I love it, and I love watching your trading journey. It means the world to me, and I love doing this. Thank you so much for watching. I'll see you guys on the next video. Peace.